Politically Incorrect show tonight. I'm very pleased that, again, on my show, we have a Republican congressional candidate, Jonathan Golnik. How are you, Jonathan?
Very good. Thank you, Carmen. How are you?
Good. Thanks for being back on the show.
Well, thank you. It's always a pleasure to come on here and have a good political conversation.
Yes, I think the last time you were on my show, you also were a candidate for Congress.
I was, that's right.
Running for the seat that Congresswoman Tsongas currently holds.
That's right.
And you decided to run again for that seat. Could you tell us why you decided that, Jonathan?
Well, you know, we, being new to politics, we ran last time. We won a primary that was made up of three other very distinguished gentlemen. We won that primary, and we went on to have a strong race against Representative Tsongas. We received, we didn't win, but we received more votes than any Republican since 1992.
Really?
And yeah, it was a good, it was a good showing, and you know, I had become very relatively close with Governor Cellucci. He's the honorary chair of our campaign this time, and he encouraged me to run again and said, you know, you need to run a second time, and sometimes you need to run 3 times. So we decided to run again. I looked around, and I realized that, you know, and no one is any stranger to this, but the economy certainly is still continuing to struggle. And as a result, we're not creating jobs. Jobs in the private sector, where the most sustainable jobs are. We're at over 8% unemployment and have been there for more than 36 months. We've got 6.5% unemployment here in the Commonwealth, but just in this district, in Lowell, it's 8.8%. Lawrence is 14.5%. Haverhill and Methuen are up at 9%, and the new cities that have come into the district since redistricting, Gardner and Fitchburg, are up over 11%. So, look, everything springs from jobs, and it's very challenging. And being at that kitchen table, deciding which bill you're going to pay, depending on the bill that you paid the month before, there's a high social cost to this that we don't hear a lot about.
Well, what, if anything, can the government do to help stimulate jobs in this country, and particularly in this district?
Right. Well, I think this is just it. I think the government is part of the problem. You know, we hear a lot of talk about new solutions to new problems, and I'm a big believer that the problems that we face can be solved by the way we've solved them for 2 centuries, and that's with a smaller government, lower taxes, and less regulation. Now, you know, the private sector is where sustainable jobs are created, and they're not creating jobs right now. And anyone who disagrees with that just needs to look at the unemployment rates we just discussed, but also there's billions of dollars sitting on private sector balance sheets right now that aren't being spent to create jobs. And the reason this is there's no visibility. We have an unclear tax policy, we have an unclear regulatory policy, and really right now, for one of the first times in this country's history, we have political risk where nothing is getting done in Washington, D.C. because of the toxic atmosphere down there. Yeah. So I believe we need to give visibility to the private sector. Yeah. Let's lower this corporate tax rate, 35% to 25%. Let's have a 1-year moratorium on the implementation of new regulations. I'm not a laissez-faire capitalist. I believe that regulations are necessary, but one thing that we do know is that when we do have increased regulation, it increases the cost of doing business. And that's not borne on the backs of businesses on their own. It's passed down to the working men and women in this district.
Yes. Well, some people have felt that the lack of regulation is what led us into this almost a second Great Depression recently. Right. As you know, we had the big subprime mortgage bust, and we had, you know, credit default swaps that were bought and sold without any regulation, and there was banks that were backed by the federal government, but yet they were basically betting with the taxpayers' money.
That's right.
And therefore, the government had to come in and bail them out when they really were gambling. Whereas if we had some of these old regulations that the government got rid of in the 90s, that wouldn't have happened. You know, where you separate investment banking from commercial banking.
Right. And I certainly, there are parts of that I agree with. I think that the real problem in a nutshell that we saw with the CDSs, the collateralized debt obligations and things like that, the CDOs, you know, derivatives are created in order to protect your risk. They're in order to hedge yourself. When these derivatives are used to be traded like assets, that's when the trouble starts. And I think something as simple, we don't need to create a Consumer Financial Protection Bureau. I think something as simple as not allowing people to trade these derivatives as assets. If you have an underlying stock or a bond, you should be allowed to obviously use a derivative to help hedge your risk. That's what they're made to do. Protect yourself. They're not used to be made to be traded like an asset itself. And that's where the trouble started.
Well, that would be a big change, because you're saying basically no more trading in options unless you own the underlying asset.
I mean, that's one of the... I happen to believe something along those lines would be beneficial. Look, we need to manage our risks. The financial services industry is becoming very complex. But at the end of the day, we do need to hedge our risks. And when people are trading products that are being used to hedge risk as assets, as a stock or a bond.
Yes.
It certainly creates trouble.
Yeah. What about the Dodd-Frank bill? Are you in favor of that, or are you opposed to it? I understand that's supposed to go into effect sometime this summer.
Well, and that involves the Consumer Financial Protection Bureau as well. I mean, I don't believe that we need a Consumer Financial Protection Bureau. Again, I think it's going to increase the layers and layers of regulation that we have in this country, and I think it's going to increase the cost of doing business. And that, again, that is going to be passed down. You don't need to see. You only need to look at what's going on with our banking fees. No more free checking. Fees when we go to the ATM. It's not good, and people are trying to make ends meet, and we're trying to do more with less. And at the same time, the federal government obviously isn't doing that, as we can see by our debt load and deficit levels.
Yes, we have a debt in the United States of over $15 trillion now. Any thoughts on how that could be addressed and when it should be addressed?
Well, we've seen the debt. I mean, we've seen the debt load increase by 50% in a little more than 3 years, and I always like to bring it down to an individual's perspective. So I ask you or anyone else who's watching, if you were to increase your debt load in your home or in your household or your small business by 50% in 3 years, you know where you'd be. You'd be out of business. I think that there are places where we can find savings. Everyone likes to say we have a revenue problem in Washington, D.C. We need to raise revenues. And to me, that's just a fancy word for saying we're going to raise your taxes. I don't happen not to believe that we have a revenue problem. I think we have a spending problem. And I think we need to get that under control. Again, let's look at the Congressional Budget Office, which did an audit on 1/3 of the budget and found $200 billion in duplicative savings, duplicative jobs. So I think that there are savings that can be found. I really do.
Well, as you know, Paul Krugman and other economists want to put off handling the big debt, the $15 trillion debt, until after we get out of this recession that we've been trying to get out of for 3 years now. We're slowly getting out of it. We've had creation of private sector jobs for over 3 years now, about 30 months or something of private sector jobs in this country.
Right.
So it involved a great deal of stimulation. Paul Krugman feels that we need to continue this stimulation. What Europe has done is they tried to balance their budgets earlier.
Right.
In Spain, in France, in Italy, and Greece, of course, is in terrible straits.
Right.
Is even in the worst situation.
Sure.
And what has happened is their economies have slowed down even more, so that the revenues haven't even been coming in as high as they were previously, and they're all mired in recession now, and it's hurting our own U.S. stock market.
Sure.
So Paul Krugman recommends that we delay taking care of the debt and the deficit until after we get out of this great recession. Mm-hmm. Any thoughts about that?
I completely disagree with Paul Krugman. I think that he is a Keynesian. He believes in fiscal stimulus that the government provides. Look, I'm a practical guy, Carmen. Let's look at some of the numbers. We spent almost $800 billion on a stimulus package that created created or saved, I still don't know what a saved job is, created or saved 3.5 million jobs. That's at a cost of $225,000 a job. It hasn't worked. Sustainable jobs are created in the private sector. This debt load that we have is a millstone not around our necks so much as it is around our kids and our grandkids. What happens in your household or a small businessman's household, businesswoman's household, when you have debt? You don't make spending decisions. You can't. And right now, the debt projections that we have are being based on historically low interest rates, 0.5% and 1%. It's not going to take long for that debt to explode when the interest rates begin to increase. And you can't increase our money supply the way you have with your quantitative easing. You can't increase your money supply and not seeing interest rates going up. And having come from the financial sector myself, you know as well as anybody, and you know this as well because you're involved in stocks as well, that these interest rates will go up just as fast, if not faster, than they came down. And so I think, again, it comes back to giving clarity to the private sector. I think we need to really begin to focus on paying this debt down. Again, in our own households, I know myself, when we first bought our home, we had a lot more debt than we do now, fortunately, but we were careful with how we spent our money. And I'm not saying that people are going to have to go without. I'm saying that if, in fact, the Congressional Budget Office has found $200 billion in savings when auditing 1/3 of the budget, and it's because of duplicative services, let's start auditing the budget.
I said, yes, thank you.